All right, mic check. I think my mic was off. All right, making sure everybody here can hear me. If you can, make sure you drop a quick comment or hit that like button for us on YouTube. I've got Chemo helping us monitor what's going on. That way, if you guys have questions, don't hesitate to ask, and we can go ahead and discuss as much as we can about what's going on with STAX AI over the course of these last 12 months. Quick little things I do want to discuss with you guys first. There have been a couple questions. The most recent one that came with our recent update. Let me go ahead and change this over here. Our most recent update added the option trade conditions. And I want to make sure that you guys understand there's a quick little reference in here under our FAQ on our main page. We can go ahead and discuss what the option trade conditions mean. There's different condition numbers. We've got this where you can expand and discuss and understand that there are different ways that these institutions can put in these trades into the dark pool. They can be late, they can be opening and closing certain things, automatic execution, sweeps, etc. The way I want you to think about it is level of urgency. If they're sweeping an order, meaning that they're quickly buying or selling in all the places that they can, generally those heighten that level of urgency, and we can understand that they really want to get in or really want to get out of a trade. And these are things that we want to keep in mind of. I'll let you guys analyze this a little bit more. The thing that we want to focus on for you guys today is to understand, are there any trends that we've noticed? And this is something that's fairly new. I finally got all the trade conditions added to our backtesting numbers. And so far, I haven't quite noticed any sort of trends that stick out for us to share with you. So if we do notice anything, I've got a couple people working with me, analyzing the data. If you happen to be somebody who's great with numbers, great with data, please reach out, let me know. I'm more than happy to share some of these numbers, share some of this data with you guys, so that we can come to some better conclusions. A lot of what I've been doing has been fairly manual, meaning that I have to go through, copy and paste, go look up a lot of these numbers, look up a lot of these prices, all manually. And every couple of back tests, I get a couple of people that reach out to me, give me a couple of tips, pointers, people who are a little bit more well-versed with Excel, well-versed with Google Sheets and things like that. And we're able to add some new things. Keep in mind, it's just the first year of STAX AI. I'm expecting over the course of the upcoming years, we'll continue to add to this and come up with some more definite type of data, definite type of trends that we can understand and share with each other. So with that being said, let's go into the backtest numbers. I did just add these through today, this last month. I do not have all the backtesting numbers for December ready for you guys just yet. You're going to have to bear with me for that. What we're going to do though is we are going to take all the trends from the previous backtesting and a couple of additional data points I've added so that we can discuss them. A big question that we have are, when should we be getting in? When should we be getting out? What should we be doing about these prices? What's a good percentage to aim for? Is there any sort of trend where the more premium that they spend or the further out their expiration date, does it guarantee the possibilities of us getting those returns or high returns? Okay, so with that being said, I've got this trends down here. The very first one, and I actually just noticed this today. I do want to point out Google Finance price. What we have here are the current prices. I want you to understand, do not get that mixed in with what the price was for that equity when it hit the high. This is all for the price of today, meaning, for example, all of these ones, comparing them to where the spot prices are on the left, they are in the green. You may notice NVIDIA I've got here in yellow because the spot price before they split, they did a 10 for 1 split. So these ones in yellow over here on the left, this one technically is now they technically got in at $40, not 406. So those are green as well over there. What we also have is the spot change. So when they got in versus what the price is now, what is the return that they have. And right now I do have all of these filtered for the highest returns, highest percentage returns. And I do want to point out Tesla just went higher today. So there may be a few of these Tesla options in here that I did not get a chance to update just yet. So those numbers may be just a little bit higher as well. So far what we've got here for you guys is we have 240 prints from when we first started doing our backtesting, which was October of 2023, our version 1 and version 2 of STAX AI combined together. When the new year does start, I will go through that. I will be taking out what we had in version 1, and we're going to give you data from there. But a couple of things I wanted to point out for us here is the first thing that you might notice, and for those of you that are experienced with trading options, we do have this IV filter, meaning what was the IV at when they got into these trades, when they got into these options. For any experienced options trader, you understand high IV can destroy that option price. Because IV, like I've taught in our options class in our ICA, Investor Central Academy, is that IV is the price fluctuation, the expected standard deviation price fluctuation up and down from where things are. And as people start to leave, when a stock's hot, IV goes up. But the moment people start to leave that room, start to leave the trading platform in terms of focusing on that specific equity or that option, IV starts to drop pretty quickly. And a quick little note, if you see IV in these higher tiers, you'll notice, yes, a lot of these were winners, but compared to some of our other numbers, these tend to be in the lower end. Okay, I would consider if it didn't hit 25%, that's actually that's a pretty small percentage of our STAX AI numbers or STAX AI callouts. Quite a few of them, they'll hit over 20%. I have the numbers over here. 78% of our 240 prints went over 25%. So you're looking at a very small portion when you're looking at these. And obviously the reason being that if you have high IV, you're fighting against the trend. The moment IV drops, even if it goes in the direction that you want the equity to go in, you're in calls, it goes up. If your IV was too high, it's possible that the value of those contracts is actually still going to drop. So just a quick little reminder. And you can actually see from here, this is just a spot price of those. These have all gone down. There's definitely a couple in here. The one big exception I would say here is MicroStrategy, which went up quite a bit. But they got in on that one at about an 85% IV implied volatility. And that's the only one that you're looking at well over 100%. You do have a couple of these Tesla ones down here. Obviously right now with Tesla, it's gone up and gone up and gone up. But just a little note, if you notice IV very high, definitely make sure that you share it with people. Let them know you're fighting an uphill battle when it comes down to those. Okay. If I go a little bit further down, and you'll notice, I wanted to point out one of the big reasons why I also want to take anything from the beginning of STAX AI to I think it was March when we released version 2. There's a little bit of missing data. I was doing all this manually, copying it over. I was able to start exporting some of my data afterwards. So there is missing IV and missing, volume and things like that for these ones, which I'm unable to go and share the data with for you. Okay. Another quick trend I wanted to point out here is our premium. This one's very easy. How much premium did they spend on their contracts? And you'll see the highest one that we had here was for Meta. They spent $84 million on that. that returns at a 75%, right? The high of that in October. Meta, you see quite a bit over here. These ones are looking, this one's at 100% plus. We've got some NVIDIA in here. The one big one, I want to make sure that there's an asterisk next to this one. This was when we first were still using version 1. The one of the big differences between our version 1 software was the fact that we weren't able to distinguish between buys and sells when it comes to our options. And it was actually revealed, as we were making that transition, this Intel was actually a sell of $23 million. And that's when Intel was trading at 43 bucks. And if you look at it, right, today it's trading at 20. So they actually, if you went with this going the opposite direction, it's bearish, not bullish. Even though it says call, it's a sell of that call. This Intel position very likely made much more than just a 12% if you consider the high of that call. And they actually still have some, quite a bit of time, if you may. It's nice now. We also have the spark line that helps us get an idea. Is it trending up, trending down? But you may notice all these high premium positions tend to do pretty well. Okay. Yes, this MicroStrategy, I will point out MicroStrategy, they got in just at the end of last month. And it's kind of dropped quite a bit since then, nearly $100 from their spot price. But they do have until March of next year, so we'll see what happens with those. So trend-wise, do we see anything? I would even say we get quite a few of them that are just in the $1 million range. Those tend to be, you'll notice, tend to be a little bit more questionable. You might say. Definitely will still have some high returns. You got this Tesla one here over here. You've got this United Airlines one over here. And one of the big questions I tend to get is, how do I know, Eric, if this is one that's worth getting into? Stacks said it's something to look at. What do I need to look out for in order to know, is it something to get into? That's where, the conversations in our Discord, or if you happen to chart on your own, a lot of times what I've started to notice is one of two different things. Number one is there's a chart pattern in which we're expecting some sort of breakout. The one that comes mostly to mind is APP, app. Very recently we had one of our members charted and showing it was going above a wedge pattern and looking for a breakout. And very quickly APP, here we'll do a quick search for it right here. APP right here. Okay. So if we look back on, I believe it was this November 18th, right? It was looking at a breakout, and from that breakout came and it had 100% return on this right away. Okay. Just in a matter of 12 days. All right, and then they got in further and even more, just a little bit, a couple weeks later, and that one was looking at 50% return. So if you're noticing on your chart, they're approaching a level of resistance, it's tested a few times, definitely consider, if STAX AI says, hey, it's about to break out, or somebody's positioning themselves for that type of breakout, I would say that increases the probability that you'll be on the side of a winning trade, right? I want to make sure that we all understand there's never 100% guarantee in anything when it comes to trading. We've all been on that other side where we feel that all the indicators, all the different things all have confluence, and it's a great trade. You have to keep in mind it's still a measure of probability. So, these ones increase your probability. If I see a breakout about to happen, I see that Stacks just went and spent millions and millions of dollars on a position out of the money. Those are situations where I would say have an increased probability of you banking on those positions. All right. Another one.
Hey Eric, we got a question.
Yeah, go
Um,
ahead.
yeah.
Hold up.
So digit 5555. So I got into
Hmm.
PDD when it was pretty high when Stacks notified it. If the chart doesn't show a breakout coming soon, is it better to just wait for a pattern that shows for a breakout?
So if it's not showing a pattern of breakout, should you wait? Well, I would say that depends on your risk tolerance, of course. If I see PDD and again, you want to use additional levels and additional things of confluence here, is notice if the flow, what you can do. Let me go ahead and let me share the software real quick with you guys. If I go into Stacks and I go in here and I search up PDD, one of the things you want to notice, number one, is it showing up under the flow scanner? I know it was just Monday, so this is a weekly type of filter. But what is it showing in terms of it? Do you see PDD showing a heavy call to put ratio, right? Like for example, we'll talk about this in a little bit. Micron, sorry, I want to say MicroStrategy. MicroStrategy's right here. But Micron has earnings coming up this week, and people are buying. There's nobody buying puts. So that's something to keep in mind for letting the additional confluence and the additional data let you know whether or not more than just that Stacks AI position is getting in. All right. But if you take a look here, PDD, you can go through, let's just filter the last week. Okay, there's just one right there. If we take a look up here, we also have very heavy call to put ratio up above as well. And one thing that I always want to do is I want to go check the buys. Okay, I want to filter and see what the buys have. Are they buying and the calls? Are they getting into positions? Another thing to look at for here is, for example, the spot. Got the spot right around $100. Are they buying for well out of the money? Right? Meaning, are they expecting it to go further? Like if these strikes over here for these big money, the ones in gold, if they happen to be well out of the money, so let's say 120, 130, 140, those that would give me more confidence that hey, they're looking that it's going to make a significant move. The fact that this PDD right now is just at 100, 105, well, you do have this one at 150 over here, but they've got till February next year. That one's very unusual. What you're looking for here is the level of risk that they're willing to take when it comes down to these positions. If they're in the money, we have to take that with a grain of salt because again, they're spending extra premium for a little bit more safety. But if it's well out of the money, you have the situation where they risk that. In this case, if it was well out of the money, that 1.79 million that they're getting into here very likely could be a situation where, it could go to zero if they're not careful with it. Okay, so um, I do know that PDD, yes, we are expecting a bit of a breakout for China. There should be, upcoming in the next few months. I would expect there to be more news. China's doing their best to boost their economy. And at the end of the day, we are noticing quite a bit of purchasing that's coming along for that. There wasn't a direct breakout showing. Okay, PDD had actually broken out and then it's kind of retraced back down. And so those are situations you want to see. Are people getting into more of a value position for that? We all understand just a month or two back, we saw a giant run up for all the China stocks due to the stimulus that they were announcing. And then price kind of, dropped back down. There's a lot more uncertainty coming back into the markets there. One other thing I will point out is if you're part of our Discord, or actually also if you are part of Stacks, you do have this ability to jump into our Stacks chats as well. You not only have the Stacks support, but also the main chat as in there. But if you are part of the Discord, under my specific my channel, you may notice I try to share the Wyckoff charts, which is kind of a playbook as to what big money does in order to get themselves into good positions, whether or not there's accumulation or distribution happening, whether or not they're expecting price to go up further. And one of the big ones that I would point out would be that MicroStrategy. Um, MicroStrategy shot up after we had discussed it. We played the breakout. I know a lot of people got out right after the breakout, but it definitely ran quite a bit after that. Okay. I hope that answered your question there. Let's go back into our numbers here. I've got some other things I want to point out. Uh, let's go up. Let me just filter this real quick. Next one, expected move. What's expected move? Expected move is where their spot price is versus the strike that they purchased. Okay. So in these situations, an expected move, if right now, let's say this one, Netflix right here, trading at $881, they're purchasing a strike price well out of the money, 1,020. So that's expecting the price of this stock to move 15%. So let's go ahead. If I filter this, if does a higher expected move mean that there's a better likelihood of it actually profiting? I actually do want to say there is a decent trend to that. I think this one, this specific NVIDIA one, yes, it's showing a miss, but overall, they've got until the middle of next year. So I do expect that one to move back up into profit sooner or later. But you will notice we do have some pretty high returns when it comes down to the further expected move that they get into. Obviously they wouldn't be purchasing that type of a contract if they didn't have some sort of knowledge or some sort of technical analysis that price is about to move in their favor in that manner. Okay. Um, AMD, I definitely will be discussing in a little bit. I had a lot of questions about that as well. But on the left, again, you'll notice there are a couple of these. Keep in mind, these are current prices. So for example, HUM here they got in on 5/16. It hit a high 44 days later and got an 88% return. But as of right now, it's gotten back down, and the spot price of that of that equity HUM is actually down 26%. One thing that we can also do is if we go into these charts, we can actually take a quick look. So for example, HUM, right, we saw 5/16. I'm going to bring this all the way back to May. You see down here, it might be a little bit faint, but the opaque volume bars down here, we want to see if there's similar volume coming up below. So it's very likely if they got in May around here, they may have sold off a bit of it already. And the most recent spike is all the way over here. Okay. So you can actually use the volume to get an idea of how many contracts are actually being traded. And is it likely that they're still in those contracts or did they potentially get out? As we continue to do our analysis, that's something that I wanted to try to find a way to quantify for you guys. But it's something that I was more recently been asked of a couple of our members and a couple of our other analysts that want to know about that too. Let's see. So expected move, very good to look at, right? For example, these ones, this one right here, Tesla had an expected move 153%. That one's a 835% return, right? So again, they're not going to go here and spend $3 million on that for no reason. Same with this one, this Meta one for 84 mil, right? 100% expected move, 100% expected move for Meta. And that was back when their spot price was right in, 460 or so. Now Meta's trading at 600 plus. So keep in mind that there's always a reason and knowledge behind why they're getting into these positions. And obviously, as you go further down, you'll notice, right, I've got expected move over here on the left right now. As I go further down, move this over. We're looking at the very far right, the wins column. Are the wins necessarily, is there any sort of trend? Not completely, I would say, but overall with our expected moves, anywhere from, anywhere above that 30-40% range, I want to say like Stacks has done a pretty good job of notifying that there's some unusual activity happening. Okay, so keep that in mind. Next, what did I want to? So I was trying to work on this. If you guys do have ways of helping me analyze this, the conditions, right? These conditions correlate to what we were discussing over here in terms of the condition trades and what they mean. I didn't find any direct correlation. The hard part about this is that since I only added this condition into our data just most recently, I wasn't necessarily able to notice if things had retraced earlier on. The main focus that I have on this current sheet of data is to see what the highs and the returns happen to be. So there's no direct correlation that I found of, hey, if they get into a single leg trade, it tends to go down then up, or if it does this or that, what type of conditions lead to what type of returns. But as we continue on, through the days of stacks, that's something that I will start to keep an eye on for you guys. All right. I'll come back to this percentage return. What I also wanted to do here is let's take a look at days bought. Does it necessarily mean if they purchase more time, does it necessarily mean that we'll have a bigger percentage move, right? And you can see here, I haven't found directly that. One of the additional data points I've added as well is the number of days bought versus the number of days it takes to hit the high. What percentage of the contract time did it take for it to hit those highs? And that one I will say is definitely all over the place as well. Here, let's go over the number of days bought. Days bought, yeah, we've got our wins. This Microsoft one's still kind of fluctuating a little bit. I want to point this one out too. We'll notice Microsoft is up 2.85% from where they entered, the spot price to today's price. Why is this one still a miss? Why is it still down? Well, the reason being is that they purchased, right now Microsoft's trading at 450. They purchased for a contract price, a strike price of 695. That's so far out of the money. So that ultimately means that the theta versus delta, the amount of time decay versus the per dollar move, they're still losing out. So it definitely hasn't moved in terms that it's still considered a loss. And those are things you want to keep in mind is, yes, this one has a high expected move, right? This is a 58% expected move. Now, the thing though, I will point out is it possible, is it likely that Microsoft might go and head toward those numbers by the end of next year? They bought for 2026. There's actually quite a bit of expectation that the markets are going to continue to make new highs, and a lot of these tech names are going to continue to go up higher. So I would say they put themselves in a decent position, just like those people that got into Tesla and Meta really early. They purchased for 100% expected move, etc., and they're actually looking at quite some returns now, if you consider that. So keep that in mind. The more time that they bought, the thing I will point out about whenever I see a ticker that has a lot of time bought, I start to, I kind of put that, take a note of that in my mind. Okay, they're buying for Microsoft all the way in 2026. Okay, they're buying for Google in 2027, right? APO in 2027. What I like to think of for stacks is it just lays a bit of a foundation. These people may have knowledge that, okay, over time, certain things are trending up. Earnings might come in as a big, a good hit, etc. And they purchased that extra time for a reason. If they expected the move to happen quicker, they wouldn't spend so much on that theta. They wouldn't spend so much on that contract ultimately, if they spent less on the time, they would make a higher percentage back. So keep in mind that there's a reason for those long expiration dates, okay? I know earlier I said there's two main things that I've noticed. The first one was the breakout. The second one actually happens to be earnings. Now the hard part about earnings, and I'm going to use, let me see if I find it right now. I'll use Salesforce CRM as an example, and then I'll also use Pinterest because that Pinterest one was very interesting too. There's a Pinterest one where they got into pins right here. I have it in a red W because yes, it moved about 8% the week of. It was a very short-term contract. Got in on the 7th, expiration for the 9th. The high was just 1 day into it. They showed earnings, and the stock went down. Okay. Now, what do I want to point out about it was there's something interesting in terms of it. The Pinterest actually had a news release during their earnings about how they had partnered with Google to add something in terms of the way that they integrated their software, integrated their platform. So there was actually some pretty positive news that was released. And I was thinking in that situation, you can't always predict the direction in which price is going to go, right? We've all seen it where we've had great earnings, great numbers released, but they somewhat missed expectations, or during their release, there are some numbers that weren't digested well by the analysts, and price of the stock actually goes down. So again, that's why we always remind you guys, you have to take these things and be careful with your risk management. The idea here was probably they probably knew that there was some sort of release with Google coming up and expected that the public was going to react positively to it, and so they got into that position. And so keep that in mind. That's one of my case studies I want to point out is yes, Stacks, shouted it out. By Stacks's standards, this 8% really wasn't completely a win. That's why I have this as a red W in here. But earnings wise and news wise, did they know something? And I will point out there are a lot of these. If you guys happen to remember them, please go ahead in the comments, share them with us. What was it that, what news was given right after Stacks shouted out that did price go according to these calls? Did it go up? Did it go down? What was it that happened, right? We had recently this Constellation Energy had some news of some collaboration that they had. You know, we had, UAL, this was an earnings play in terms of United Airlines. This one's looking at a 10x return due to the fact that they're buying back shares, that they had great earnings, things went up. I believe CNX was another one as well that had news where it shot price up and then price retraced afterwards. So the idea here is that Stacks is, I like to say Stacks is always listening. And Stacks is trying to put an ear to the door of these institutions and try to figure out what it is that they're trying to get into. What kind of knowledge do they possibly have that we can also get into and ride along the waves with them? But keep in mind too, and we commonly say this too, is bulls make money, bears make money, pigs get slaughtered. The hard part about this is we know stacks can get you these multipliers, can get you these high returns. But again, pigs get slaughtered, meaning the greedy get slaughtered in the markets. It's very quick where you can see, for example, I think this CNX one right here had the pop during their earnings and then quickly retraced back down. So this 100 or this 200%, if you're still holding on to it, simply because they've got time, if you're still holding on to it, you might actually be in the red nowadays. And so it's important to make sure that either you set your stop losses or you start to leverage yourself out of certain positions. One of the strategies we like to talk about is get into the positions where you can afford multiple contracts. And by affording multiple contracts, once you hit a certain percentage, let's say you hit 50% return, you can take 3/4 of that, 75% of your position off the table, take those profits and let that last 25% run. Those are the strategies that we would suggest is that, you don't want to load the full boat right off the bat. There's also situations with some of these where you want, for example, I'll use PDD as an example. PDD's dropped quite a bit from some of these entries, but if you didn't have a chance to average down on your position, right, add in at a lower price to bring your cost basis down, those ones can quickly turn into big losses if you load the boat right off the bat. So please be careful with those situations. Again, like I said, none of these are guaranteed. Stacks is, yes, a 90% plus hit rate. But again, it's hard to time where the highs are. That's the problem, and that's the nature of the markets. That's the nature of trading. You don't know where the highs or where the lows are going to be, but you have the probabilities of those trades that you can get, that you can look at, and keep that in mind. It's better to take those profits, some of those profits off the table, or at least take your cost basis off the table if you see a higher return. You can let some of those runners run, and we can see, especially with our stacks back testing, there definitely are some that get some really good runs. You definitely go up quite a bit from them. And keep that in mind that it's still a level of probability, still a situation that you have to be careful with your own risk management. Okay. Let's see. Percentage return, right? Like we said, I do need to update these specific numbers. We've been talking about this. Our hit rates and our average percent return. You'll notice the average return's been going up because a lot of these have had more time for them to, like I said, to let them marinate. Let these equity, let the stocks make a little bit more money, let the money flow in, let it flow out. But overall, our highs of these trends, especially with most recently Tesla, MicroStrategy, very, very, very high returns in these situations. And if you're paying attention to stacks as these are coming in, I do believe it lays a pretty good foundation and a basis for you to understand, hey, if I see that stack shouted something out, I didn't get in right away, I watched it, it dropped a little bit, hit a level of resistance, hit a level of support, and then I started to average in or started to get into those positions. There are there are a lot of people that have a lot of trust in Stacks and Stacks AI and the knowledge and the data that we're sharing here. Because keep in mind, there's a lot of dark pool flow. There's a lot of information being shared out there. And what we've done with our software is we've done our best to filter as much of the noise out. So the stuff that isn't necessary for you to look at isn't actually included. You're going to see there's some other softwares out there that do a great job of sharing dark pool data, and they might have a couple of data points that ultimately we're not sharing because our software is deeming it not necessary for us to pay attention to. And through this last 12 months of back testing of Stacks and Stacks AI, you can see there's quite a bit of information for us to share. I do want to ask as well for you guys, please in the comments, share the information that you have. If you've got into a stacks position and it kicked your butt, I'd like to know. And if you've gotten into a stacks position in which you've banked greatly off of, please share with us. What are your observations? Because at the end of the day, we're trying to compile as much of this information as we can so that you guys can understand and use this software to the best of, to all of our knowledge. Okay. Um, Stay tuned. I will have our back testing for the month of December up around the new year. I will be traveling a little bit and visiting family and friends, but I'll get that up as soon as I possibly can for you guys. And one thing I also want to do here is today, I actually do have Dylan, who's one of our members in ICC and also a Stacks user. And a little bit ago, he asked me to share some of this data with him because he wanted to do a little bit of backtesting himself. He wanted to see if it's possible to get a certain percentage of returns within a certain amount of days and to continue to rotate into different Stacks AI plays to compound his returns. I'm going to let him give me a quick moment. I'm going to have him share his screen, and he's also here on Zoom with me. Give me one quick second, and I will share. Dylan, if you want, go
What's
ahead.
going on? What's going on, everybody?
Okay, let me go ahead and share your screen. I'm going to put up
Yeah, man.
all right, go ahead. I'll share that with. All right, this is Dylan's screen. I'm gonna let you guys listen to what he has to say. If there's any issues with the audio, please let me know ASAP, guys.
Well, cool. So, like, my biggest thing with myself and my situation, right? I got a full-time job. I'm a father of a 1-year-old, right? So I don't have much time to do the charting and the analysis and, focusing on the market on a day-to-day basis, on an hour-to-hour basis, right? Um, some people have a lot more free time. That's just not my situation. So, my options background, I was actually a net seller of options. The statistics, if you actually look at the statistics, there's a greater chance that our options will always go to zero versus us finding those 1 in a million that run up 90, 100, 200, 500%. So with my current situation, it was okay, how can I take this data that's been presented and sort of build a system, a trading system around it, right? Now, I haven't worked on this in a long time, but one thing I wanted to share with you guys is, okay, so if I'm looking at some of these older trades and breaking down the prices on a hold time between 5 days, 10 days, 15 days, 20 days, trying to figure out, it's like, okay, yeah, for this CEG, yeah, I could hold it and possibly make 400%. But how long is it going to take me to make 400%? Right? Is it going to take me? I mean, this one hit 400% in 23 days. That's fantastic. But maybe you don't hit that within 23 days. We have zero control over the stock market, right? We have zero control over what these options are going to do. So my thing is okay, let's look at the data and try to figure out where's that nice little sweet spot. There's a trading platform called Tasty Trade, and they do a lot of good options data analysis. So what I did is for tonight is I took this example of this NVIDIA trade that posted on October 10th, right? So this trade's been with us almost past 2 months, just over 2 months now, right? So the high is right here. You get a nice little 34% return on this NVIDIA trade. But I had to hold it for 33 days, right? So it's okay, if I want to time my money up for 33 days, am I really going to get, is the juice worth a squeeze? Am I really going to get as much percentage profit out of it as possible? Whereas this is where this number comes in, say profit lost percentage on the day basis. So if I look at the data from when this stacks posting hit us on October 10th, my highest percentage profit on a day basis was actually 4 days away. Yeah, I only netted 15%. Ooh, big whoopee, right? I didn't get the 200%. But damn it, I hit 15% within 4 days, right? I had 3.89% profit per day. Okay, yeah, I hope maybe I'll hold it another 3 days and I get the 22%, right? Or maybe I'll hold it the 12 days and hit my 32%. So I can either hold it 12 days for 32% or I can hold it 33 days for an extra 2%. Why would I take that 2 week risk on the rolling of the dice of maybe getting 90% return? For me and my style of trading, that's just not who I am. I don't have time to really watch the market every single day and focus on it. So what I'm trying to do is present a structure for the ICC team of being able to find where is that nice little sweet spot if you want to just do sort of like a set it and a forget it. Based off of just eyeballing this data, I think that sweet spot's somewhere between that 10 and 15 days, right? And in that first 5 days, yeah, sometimes you'll get this nice little pop of hitting like a 62% profit here, and here's a 37% and an 83%. Okay, so maybe we play with this scenario. Stacks AI throws out a position, you go in, right as it posts, and then maybe you do a little math on your calculator, do a quick sell order for 40% return. And if it hits a 40% return within your first 3 or 4 days, then cool. You got 40% within 3 or 4 days. All right. Like when you go to a savings account, Bank of America savings accounts, what, 3% a year if you're lucky, right? And you get 40% over a couple days. That's awesome. And then maybe after that 5 days, if you don't hit that initial 40%, maybe you drop down that sell target, to which case average return from this data set, average return was 14%, right? So maybe you drop it down from 40 to 30, and then maybe you'll hit, a 57 or an 80 or a 58, and something will pop within that 10 days. Um, so gonna continue to work on this, for the ICC team and see what I can find for you guys. But I'm pretty sure my gut is saying that sweet spot is going to be somewhere between that initial 2 week period, at least on a percentage profit per day basis. Is it going to be a sexy 90%, 100%, 300% return? No. But another fun fact is ICC kicks out, or Stacks kicks out a posting almost once every 3 days. I think it's like once every 2.7 days. So if I make 30% 4 days and then I just wait another day, go into the next position, make another 40%, make another 40%, and just keep turning and burning it. And instead of risking and holding my money into one position for 200 days with the hopes and dreams of hitting a 700% home run, maybe I just keep cycling the money over and over and over again every 5 days, every 10 days, and I get the same return anyway with a lot less actual physical risk. So that's what I got for you guys, and hopefully I can get some good stuff for you in the new year.
All right, thank you, Dylan. That was really useful because for those of you that are actually a part of the Discord, you'll notice Dylan's got, his posts are like, up, quick Stacks AI trade, 25% return in X amount of days. It's a stress-free type of trade. And I definitely think that for some people, that might be the way to go. All right. For some people, it's, I know some of you guys overstress about some of these, and I get it. You don't want to necessarily get into a position that's too big, but again, it's money on the table, and we don't want to over leverage ourselves. But the idea is that having to monitor these things over and over it's a lot of a lot of processing space, a lot of mind space that you guys got to understand. You'll notice that the stress-free trades are the ones where you create a system and you're able to rely on that system in order to profit from. And that's something that Dylan's done a great job and helped us analyze in this situation. He'll get into a position and he'll set his stops, set his profit taking, and he'll just let it ride. And every once in a while he'll get that notification. I know Andy as well is a part of our Discord. He's one of the traders. Also does that too. He'll get into a position, set his profits for X amount of percentage that he's predetermined, and it'll notify him on his phone when one of those levels hit. So understand that what we're trying to help you guys do in order to profit or be more consistent with your profits is simply just to present you guys this data and let you guys understand what it is that you can do, what is possible, what the risks obviously are, but also showing you that it is being done by a very decent group of people who have taken their time and trusted Stacks with what it is and what the information is that we're sharing with them. And just so you guys know, Dylan had reached out to me. He said, "Hey, I wanted to take a look at your guys' the data that you have on those back tests. Can you share a little bit of it with me so that I can present you with some of my findings?" And this is where we are. He himself says he's still got some work to do, but I do believe that the information he's sharing with you guys right now is super duper valuable. And if I hope that you guys can take it to heart and understand how to use it so that you can profit from it as well. So thank you to Dylan. If you got that information, please go ahead in the comments and say thank you to him as well if you can. Let me take a quick look. I got two last little notes that I wanted to share. I had some people asking about AMD and a little bit about the semiconductors, and then I wanted to share with you guys an upcoming update that I have. And so let's go into this real quick. Let's go into got my trading view. Where is it? Okay, let me redo that. Let me add my trading view so I can share that with you.
Screen's blank right now.
Yeah, I know. I'm
Okay.
There we go. I don't know, I couldn't find it on there for a moment. Okay. Yeah, let's just, since this one's already currently up. Remember I mentioned about how app was about to break out, right? App, let me just clean this up for you a little. The red circles I have, here's one of the red circles, here's two more of them. Those are situations where Stacks shouted out that they were getting, there was a Stacks AI shout out. So here's one of them. Tested the top 1, 2. On the third test is where they got in. It retraced a little bit into some supply and then shot up from there. So that was one of the big returns for APP, for app. It made a similar pattern here, but we didn't see any Stacks AI callouts. But if you were watching Stacks as a whole, there was some in the flow and some in the flow scanner that you could take a look at. As of right now, Stacks has these two. These two red circles are where Stacks AI most recently called out APP. It's come down, tested this bottom range, and it actually had a very big move most recently. So I actually, for this one, would not be surprised to see it retest this middle range and then maybe not right away. I would even say test that range, come down, hit the highs, retrace a little bit before it goes up higher. So just with what Stacks has to say, that's the kind of move I'm expecting, especially since they have these positions in here as well. Next, we had AMD. This chart's a little bit more messy, but let's go ahead and talk about that. It's been in this kind of a flag pattern. If you kind of notice back over here, it's just a bigger version of it. With the way that our semiconductors are currently moving, also keep in mind I'm looking at this on the weekly, we do have it hitting some of our lower ends. And every time it hits that bottom part, you'll notice we have a bit of rejection. AMD actually on Stacks specifically, let me pull this up real quick. AMD on Stacks specifically, I don't think there was any sort of, nothing huge in terms of Stacks AI. So our most recent call out for Stacks AI for AMD was all the way back in April. But if you look at the buys right now, it's kind of all over the place. But one thing I will point out is over here on the right, our equities, our dark pool equities in particular, you actually have a lot of people, just this last week too, spending tens of millions of dollars, if not hundreds of millions of dollars on AMD getting into these positions. So in my opinion with this, pull back up trading view. My opinion with this, they know that on the weekly, it's fairly oversold. It's hitting this range. You see this high on the very left. It's hitting that range. Now the thing that you have to keep in mind, especially with options, is that we have to be careful. Is there a possibility that this will actually go a little bit further down? Yeah, but in those situations, I would expect that big money would probably go ahead and average in and add in a little bit more. If it goes lower than this candle, this green candle over here, down under 120, I actually expect there to be a decent amount of buying that would probably push price back up into those ranges. You have a small gap over here, a tiny little gap up over here as well. That could be looking to get filled. Earnings isn't until February. So you have to keep in mind this is playing off of current sentiment when it comes down to semiconductors. You got your TSM, you have your Nvidia, even the AI hype. Micron, Apple's part of that AI hype as well. So there's definitely a lot of activity going on when it comes down to those situations. The other one I wanted to point out here was if you go into our stacks most recently, and this is if you're on our uh, our desktop. I'm going to take off these just to give us some more room to look at. Our STAX AI, most recently, we just had Google. We also had just this, and keep in mind, 12/16 was just today, earlier today. So 1, 2, 3, 4, 5, 6. Broadcom just announced their earnings last week, right? If you had actually gotten into this Broadcom position, this $7 one, for March of 2025, this one's already over 100% return from just the weekend. Okay, but here we just had two different expirations. Strike price is a little bit different, but again, well into the 200s, 235 and 280. So the expected move, 41% and 18%, and the spot price is right under 200 right now. So if I go into my trading view and I take a look over here at Google, Google's just breaking out, okay? What generally happens with things like this? Well, let's take a look in the past. Usually what you have here with a breakout, right? You break out above recent highs, you're going to have this area of consolidation. Breaking up above, area consolidation. Breaking above, area consolidation. So what usually happens is you break up above a recent, right, a recent or most recent high. It goes up and then it kind of bounces around before it decides what direction it's going to go in. Now, is it possible that it's reaching all-time highs and then it's going to retrace? Yeah, of course. But in terms of these bigger names, in terms of it being Google, is the probability on this side that this very likely can go higher? And what is STAX saying? STAX is right now telling us that, let me pull it back up. STAX is right now telling us that they're purchasing for end of 2026 or middle of 2025. So again, there's quite a bit of time, but in terms of the overall bullish sentiment of it, do I see Google above 200 soon? Yes. Do I see Google headed toward that 220, 240? At least that's what STAX is telling us right now, and it's something for us to pay attention to as time goes on. Okay. Last but not least, we do have an upcoming update for our STAX software. What you'll actually see very soon with STAX, we actually have a politician tracker that's coming up. What you'll be able to do, because most recently Nancy Pelosi was in NVIDIA. She was also in Broadcom, AVGO, which just broke up into new highs as well. So you'll see, right? And again, like this one too, all that volume coming in, going up higher. Oh, there we go. AVGO, Broadcom, all that volume going up higher shows that it's being bought. It's going up. And look at how much time that they're purchasing for those STAX prints. Just gives you a hint as to where things may be potentially headed. Let's see. Olga just asked, there was a 32 million buy last week. What was that for? Do you know? What we can do here is, let's see, let's buys, premium. If you guys haven't been doing this, you can go ahead and filter, right? Hit the premium, filter for low, and then to the high end, 32 mil. Probably isn't the most efficient way of looking at it, but there we go. Filtering through the premium button up here, you guys can see all the big purchases over the time that we've had STAX. Keep in mind, everything that's still on here is potentially active, meaning between the date that they purchased and then the expiration date. Now, does it mean that they're necessarily still in this position? Not necessarily. Let's see what AMD had. 32 mil. No, we do not have that on our filter right now. So a quick little note.
37 mil. We have a 37 mil.
We had a 37 mil purchase for AMD.
Yeah. Oh no, I thought she was talking about NVIDIA.
Oh yeah, no, nothing for AMD right now. Oh, okay, so Chef just mentioned that $32 million was deep in the money, so it got filtered out. According to our standards of what STAX is trying to show you, yes, it's a lot of money, But with it being that far into in the money, that far in the money basically means that it's not as an aggressive purchase as that 32 mil makes it seem. If it was out of the money, meaning they're willing to take on higher risk with that 32 mil, it would definitely add into the bullish sentiment in that sense. So it got filtered out in according to our filters. I have a few minutes. If you guys want to let me know in the chat, how was this useful? Did it help you guys understand things a little bit better? Is there anything that you'd like to see in the future when it comes down to stacks? Is there anything that you wish we had, things that we aren't able to show you in the software or things like that? We're always open to suggestions if you can. Quick note about our upcoming politician trades. They will be as real time as politician trades can be reported. So as soon as the information is received by the databases is when it will be shown. There is no way for anybody that says they have real-time politician data, meaning that the moment that that politician clicks buy, that you'll get the information. That's not how it works. Politicians have a separate form and a separate way that they report these purchases and these sells, and as soon as the institutions, or as soon as I would say the SEC and the databases receive that information, is when we're able to relay that information on to you. But our politician trades will be coming up very soon. You guys will, if you're not already part of the email blast or part of Discord, please, there is a link in the description for this live that you can go ahead and give us your email so that we can send you that information when it is available. Custom date range search. You do have a way to search date ranges. I'll have Chef see if he can answer that specific question, if there's a specific range that you can. If you specifically want, like, March through April type of thing. Right now you are able to search the greater than or equal to, or take the date from a certain date till now is the way that it would work. Got any other questions, you guys? Please, if you didn't already, hit the like button for us. We're just trying to make sure that people understand that we're doing this. This is a unlisted link for the live, so you only got this if you are part of our Discord, part of our email blast, part of Stacks, etc. If you want to get on that list, go ahead and join by giving us your email in that link below in our description. Also, if you have any questions, go ahead and let us know. You can go ahead and send us your questions, help@investorcentralclub.com. If you have comments, you have any sort of suggestions for us, you can always leave us that there for us. That way we can help you guys, do as much and help you guys understand what's going on with stacks. We can only shout it so loudly from the rooftops. Please go ahead and share with your friends, or share with those that you want to know about how great this software is. Any useful indicators in TradingView TOS? Let me save that for another one. One of the things that we do teach in Investor Central Club what indicators are useful. Keep in mind, the thing about indicators is that a lot of the indicators that you will be using, no matter if it's TradingView or Thinkorswim, keep in mind that a lot of indicators are all going to be after the fact. There are very few leading indicators out there. The main one that does exist is the bond yields and things like that, the difference between those. But most things are lagging indicators. So as much as indicators do help you make a technical analysis of your charts, most of it is always calculated after the information, after the data has come in. So keep that in mind, okay? Edwin, if you'd like to, go ahead and message us. We're more than happy to chat with you individually if there are specific indicators and things like that that you would like to discuss, and we can always bounce some ideas off of each other. I wanted to make sure you guys thank Dylan for his hard work as well, for putting in the extra time. Again, he didn't have to share that with you guys. He didn't have to share his findings. I'm very, very appreciative of that, what you did for us here. And looking forward to if you do discover anything else moving forward.
You got it, dude.
Okay. If that's it, guys, we're going to try to do additional lives in the future. Obviously, we're going to wait for additional information or anything else that I do discover with our back testing. Keep an eye out for the upcoming back testing, which will be out at the beginning of the new year. If you're not subscribed to our YouTube, go ahead and go do that right away. You guys will get notifications right off the bat when things are posted and when things are being shared from there. If you're interested in joining the Discord, interested in joining and subscribing to STAX, there's the link that is not only in the description but in the chat box as well. And yes, Alan said it. Dylan is the man. Thank you again for joining us today and sharing your findings. With that being said, this is Eric here with Investor Central Club, STAX AI, STAX Software. See you guys in the next one. Happy holidays, guys.